Thank you, and welcome to the webcast, our extended conversation on centrally assessed taxes here at thecountyseat.tv. And of course, our guests are Larry Walters, who's a professor at Brigham Young University, and Mark Altum is the Davis County Treasurer. We were talking about the switching to a more of a property or asset-based taxation for centrally assessed taxes. And you think there's going to be a reaction from taxpayers on that?
That would be my suspicion. I think that the taxpayers will object, and the main reason that they will object is they understand the current system. As complicated as it is, as expensive as it is for both taxpayers and government, they understand it. They know how to work within the current system. If you move to a new system, then you have all sorts of uncertainty. And one of the things that businesses like is certainty. So the fact that there's uncertainty about how the new system will work and what the implications will be for their particular operation, I suspect that there'll be at least some initial resistance to moving in that direction.
Would it be a fairer system?
I think it would. I think it would be much fairer because it would, in the end, it would be more certain. You may see some winners and losers. You generally do when you change policy. So some companies may face higher taxes, others may see lower taxes, but on balance, I think the system would be more fair, it would be easier to administer, and there would be fewer appeals on the part of taxpayers and on the part of counties.
Which would then roll to the county's benefit because they'd have a better understanding. The commissioners look at the budget that's presented to them or the amount of income, they can budget better.
Yes.
Right. Because right now it's like, well, would you, could you? Well, we might get this, but we might not.
Right. The stability of what that would bring would be interesting for the counties to benefit from.
It would.
From the county's perspective, it appears, maybe perception, but it appears to us that if a centrally assessed taxpayer has the chance of appealing and gaining $500,000 or something like that, and it costs them $250,000 from a business perspective, if I got $250,000 net out of that, even though it cost me $250,000 to appeal, I'm money ahead from. So that's some of the weakness of the current appeals process, I think.
So is anybody doing it like that anywhere? Instead of on an income basis, an actual property valued basis?
Well, the state of Utah does use what's known as the cost approach to value, because again, there are three approaches, and the state tries to use all three of them for each company, and then make some judgment about how they should be combined and to arrive at a final value. The question is, how much weight and attention do you pay to one approach versus the other? Yeah. And that's very much based on the quality of the data, the judgment of the assessors, and what they think about market conditions, things of that sort. So it's more a question of where you put the emphasis than it is really fundamental changes.
How often do audits come up? I mean, I'm going back to the Rocky Mountain Power deal. You've got a $6 billion discrepancy, I think, basically, between what their stated value was and what they sold for. And so people look at that and go, well, wait a minute. They got to report their own value, and then taxes were assessed.
They don't exactly report their own value. They report their own income. They report the cost of what they paid for assets, and they report the basic information that the state then uses to look at them and say, this is what your value is.
In other words, like you're saying, Larry, I believe, is that the intangibles are part of the value in a sale, and those intangibles constitutionally are not to be taxed. Is that correct?
So if Berkshire Hathaway, in buying Rocky Mountain Power, looks at the rate structure and says, we think that the power is worth more than that, we can get a rate increase, we can increase the income, they're going to pay for the opportunity to be able to do that, which has nothing to do with the asset value.
Right.
And shouldn't be taxed. And so the intangibles that are being purchased in that transaction somehow have to be backed out. And whether or not they're worth $6 billion or not is obviously a matter of some dispute.
The $6 billion question.
Wasn't there a TV series about that? No, that was a man. It was only $6 million.
Man.
Yeah. is there any concern that there's not enough auditing going on? Because I mean, I know that's going to be a thing that's triggered in people's heads. Is the are they auditing enough? Because the self-reporting thing. I mean, I just know the average fellow sitting at home going, yeah, if I could just write down what this house is worth, the paint needs to be replaced, so that devalues it, and that and it.
Well, let's talk about the kind of information that these companies have to report. And I'll take Rocky Mountain Power as an example. Mm-hmm. They have to report information to the Federal Energy Regulatory Commission, audited financial statements. It's about a 300-page document that they have to turn in that is audited. They have to report and the state uses that information as well. They have to report to the SEC audited financial statements. The state uses that information as well. So a lot of the information does get audited. The state also reserves the right to go out and visit sites and look at assets and see what's actually physically on the ground. That's difficult to do when you're talking companies that have assets spread across 7 or 8 or 20 states.
Yeah. Delta Airlines could hide planes very easily. You're going to go here now? There now?
But these companies are publicly traded, and they're so they do have some very rigorous standards that they have to meet for the SEC, for Federal Energy Regulatory and other regulatory bodies. Mm-hmm. So it's not like they can just pull the numbers out of the air.
Well, that should be relieving. Yeah.
When the State Tax Commission personnel is the one independent of the taxpayer that actually goes through the process of determining the value, not the taxpayer themselves.
Right.
Okay, so there are some checks and balances.
Yes, there are.
All right. Any other things you think that we have missed in this conversation? Other than the arduous details that would be, we'd need to get. It'd be like Glenn Beck. We'd have to get you a blackboard so you could start writing at
Especially
this point.
Since I'm a professor, I got to have the board. So.
Right. Yeah, it could get complicated. It's a complex issue.
Well, gentlemen, thank you for taking these few extra minutes to discuss this further. And if we have any breaking developments, like a new bill that comes up, would that make you happy to see that bill come back?
Personally, I think it would be a great solution for most of the counties. We thought it was there. I mean, obviously, it passed, but from the county's perspective, it wasn't any objection of the counties that caused that to be appealed. And so we don't understand the perspective of those centrally assessed taxpayers who apparently encouraged that to be repealed.
Well, that'd be a topic for another show.
Okay.
Again, gentlemen, thank you very much, and we'll look for you on air 8 o'clock Sunday mornings on the county seat. Thank you.